great to see such a crowd. And after hearing Sunil, it's very difficult to make a case for long short. The best proponent of long only strategies and the best practitioner in the country as I know him. But the beauty of the markets is it gives opportunity for various strategies, and essentially sticking to your core strategy is what Sunil was highlighting. I'm going to make a case why long short strategies should be an important part of your asset allocation. So here we go. Why do we think we should talk about long short right now? We feel there are very, very important structural reasons why we should talk about long short context in India now. One of the things is that we're going through a very, very important evolution, an emergence of a sophisticated class of investors who are willing to absorb incremental risk for incremental returns. And I'll explain this as we go along our talk. Second, the Indian wealthy, there's a lot of wealth generated in India through the third generation of entrepreneurs who are growing rich, and they are growing fast, and they are looking for alpha generation and wealth preservation. And third, very, very important, and probably I must stress this particular point is, and probably it is underappreciated to an extent, the regulatory environment, I think, is far more conducive and far more amenable to the emergence of these asset classes to cater to the diverse need of investors. And I refer this, let's say 15 years back, when talking about long short, used to be talking some exotic stuff, and there was very little appreciation on part of the regulatory and the compliance frameworks to address those asset classes. Today, you have a regulator, you have a compliance regime, which is far more conducive, and therefore that support essentially goes a long way in ensuring the growth of the asset class. Now, this is a classic India financialization story which has been talked so often. But here is a very important point. If you look at the AIF and the PMS category here, on the bottom left, will give you a flavor that this is typical HNI money, the wealthy class money, which traditionally got invested in real estate, gold, and whole lot of other asset classes which probably were not captured to that extent in the entire net worth, or were in some way managed only for preservation. We believe that over the next few years and decades to come, these particular assets will convert into financial assets, and they will look to generate return. Of course, not to take away the fact that mutual funds, $500 billion asset size in India, and we believe it has a significant scope to grow over decades to come, not just years. And this rising trend away from bank deposits as the only means of generating returns on capital and savings is gradually moving towards mutual funds, and it is only set to accelerate as we go along, which is also reflected in the demat accounts and the SIPs that we've seen so many times. The whole media is buzzed with that. The bigger point I want to make through this is that there is a very, very large array of investor class which is looking to allocate much higher tickets and looking for diversity of strategies to generate return. India as an economy has been traditionally taken as an emerging market. It has been taken as, in a way, at a certain stage, as the poor cousin in Asia through the 90s and through the early part of this century. But we believe that things are changing, and they're changing structurally for the positive for India as an economy, India as a consumption destination for the world, and India as a manufacturing center for the world. And that is leading to a significant emergence of a new class of entrepreneurial class, which is leading to a much faster growth of the rich in India. If you take a look at the India numbers, we're looking at about 1 million odd people with investable amount of $1 million plus. That's the definition. That million numbers, we believe, is still underreported. There is a significant amount of money which is lying in, not just in tier 1, tier 2 cities, it's probably lying in tier 3, tier 4, tier 5 cities, waiting to be tapped with the right amount of advice, right amount of asset allocation strategy, and right amount of risk management, which will lead to a significant growth for the industry. Not only is India amongst the fastest growing rich category, the rich are also growing much faster. Take a look at these numbers. We are expecting the Indian HNIs to grow towards about 160,000 HNIs in India over the next 4 years. Ultra HNIs, which are defined as the individuals with investable net worth of $30 million plus, are going to be 19,000 odd. These are projections based on third-party opinions. The bigger point is that these are the target segment for the long-short strategies that we believe will have a very, very important role to play over the next few years and next few decades. And they will require a very, very targeted approach. Some of the aspects which I will highlight as we go along. And of course, not to forget the Indian billionaires, because of the entrepreneurial culture that we have seen over the last so many years, we have seen a significant growth in those numbers as well, and this will only grow higher as we go along. A very important part, why would these families, these entrepreneurs, these family offices that we have seen mushrooming across all over the country over the last so many years, what is the needs that they have? I think it is very important to look at the internal factors and the external factors which influence their behavior towards investments, towards managing their wealth. And I think it is very, very important as asset advisors, as distributors, as manufacturers, that the robustness and the entire sustainability of the portfolio that we talk about is importantly addressed to harness the real value, preserve their capital, and address their evolving needs over a period of time. This probably is the most important slide, and I want to really address this as to what are the real needs that we believe the HNIs, the ultra HNIs are looking for. And that's where the long-short strategies play a very, very important role. They are looking for extremely innovative products. There's a lot of wealth that they have. They can preserve it, but they're looking to generate alpha. And for that, while long-only strategies will play a certain amount of role, it is also the other innovations around those product strategies that will involve a lot of hard work by us as stakeholders in the industry towards structuring the products, towards mandating the AIFs, the unlisted equities or global investing, which is a very, very large area now also emerging from the Indian perspective. They're looking for a customized bouquet to generate returns. This is very, very important. Unless you are able to address that need, the generic products are not going to help beyond a level. And that is where we believe long-short as a strategy offers that customization based on the risk-return curve of the individual client, based on the individual risk-return perspectives of the client to be able to add value. We believe thematic and curated products are also going to be very, very important because there is risk appetite for that money. There's a money available for 1 year, there's a money available for 3 years, 5 years, 10 years, 15 years. Depending upon the asset allocation strategies that you're able to devise to your clients, it's important to bucket those correctly. And again, we believe long-short offers one of the means to address that need. The other important part I want to highlight on this, that there's a very large base of mass affluent population which will emerge over the next 10, 15 years. And that eventually some of those will grow into HNIs and ultra HNIs. Tapping into those at the right time with the right relationship is going to be the only means to attain success and gain the eyes and the ears of the client mindshare. A quick look at the numbers. I think some of these numbers have been discussed earlier also. But just to run through, we've seen a significant growth. This was over the last 10 years when the AIFs were started. So we're ballpark at about $10 billion on the Cat 3 fund categories right now. To me, that number can grow multiple times, provided the right framework, the right strategies are followed, and therefore able to offer the right risk-adjusted returns. This is the composition. You typically have 1/4 of the current assets in the AIF Cat 3 as long-short. But we believe that this has a potential to essentially quadruple in the next few years. So we are looking at potential numbers which are closer to about $7 to $8 billion on the long-short strategies which can be managed from an Indian perspective. The important part here is that the market is ready to offer those kind of returns to those products. But the bigger element for us is to manage the risk right. Because not only do the long-short products have the ability to generate higher returns, but at times a wrong strategy can also generate a higher return, higher risk, and a higher volatility in the portfolio. And therefore, maintaining the right size, maintaining the right positions is extremely important for us. This is a quick snapshot. Essentially, where do the long-short funds lie? You can have a typically low return, low vol product, which are typically debt products, let's say in a large sense. But if you want a high risk, high return, you typically go into mid cap, small cap investing, in which Sunil was talking about, historically talking about the track record, that over a longer period of time, small cap and mid cap generate a significantly higher alpha. From our understanding, we believe the long short lies somewhere in between. It helps you generate a alpha while containing the risk on the entire portfolio. And that's where the positioning has to be rightly communicated to the client in terms of their expectations from the product. Sometimes the long-short product is typically taken as a leverage product. And therefore, the expectations of the clients are that this will generate a very high return for me. And if it does not, then those expectations are not met and it generates a bad experience for the client. For us, long-short is not just doing leverage trades. It is also managing your risk on the entire portfolio, which may be also a combination of large cap and mid cap. And therefore, being able to communicate to the client those aspects is extremely important. This is just a quick comparison of where the global versus India picture stands. I think we are very early days into that situation. Globally, you will see typical hedge funds as they are called. India, we typically don't use the word hedge funds. We call that long short. Hedge funds are typically 1/3 of the alternative assets. And long short funds are typically about double digits of those alternative assets. So from an Indian perspective, we're just starting over there. I think over the next 10 years, I personally believe that some of these percentages will go up materially. So we're looking at long shorts and other hedge fund strategies being just at 3%. And out of that, pure long short is just 2%. So it's not even a percent over the overall assets under management. I believe this number will become very material and add to the return generation for the HNIs and the ultra HNIs over a period of time. Now take a look at this. Now these are typical Nifty returns over the last 2 decades. Now had you invested, and there have been some charts shown since morning by the other presenters, which essentially said that if you had invested money in 2000 and stayed invested, it would have gone up by 3x or 5x or 10x or 20x, I mean, depending upon the particular exposure that you would have taken. That's where I want to make the point that the long short would have helped you normalize your returns during this entire volatility. So in good years, while the long-only strategies would have generated a much higher return, but in bad years, the long-short strategies would have helped you to preserve capital, and they would have also generated a more normalized return. So in a way, it helps control volatility. That's the important point. So the CAGR on Nifty will typically work to about 12-13%. But if you can generate even 100, 150 basis points, 200 basis points of sustainable alpha on long short, that's where the real delta will play out. And this is exactly the requirement that we believe that the HNIs and the ultra HNIs are looking for to manage their wealth. This is another perspective when we look at the point I was making on the improving of the returns and the reducing of the volatility. If you look at typical MSCI world allocation, you're looking at a 15% volatility and potential returns of 3%. But as you go along towards the right side of the curve, the annualized returns go up, and so does the volatility tend to go down because of the mix of the asset class. The second from the bottom typically shows you that the volatility reduces and the returns enhance. And typically over a period of slightly longer periods, let's say 17-year period, as it has been highlighted, the small additions of long-short funds can add a significant risk management to the overall portfolio. Now, this is an important part. Why? Because you have to have this as a part of the allocation. It doesn't mean that 100% of the part goes to the long-short strategies only, or 100% goes to long only. The case we are trying to make here is that long-short is now a need to manage not just returns, but also risk and volatility of the portfolio. Therefore, it's in a way a diversification of the entire asset allocation, which is taken as a bigger part of the initiative taken by any wealth advisor, by any distributor, or for that matter, any manufacturer. From our perspective, we had taken a very significant initiative in terms of establishing a long-short product. There is a product already that we are running, and there's a second version of the same similar strategies that we'll run, but slightly with a different volatility level, so to say. We're happy to engage with you all, and our team is around. And do make it a point to visit our stall. We're happy to engage further. And to us, India is just at the cusp, a very, very important inflection point over the next decade. And we believe long-short strategies are going to be an essential part of that asset allocation to whomsoever you are dealing with as a client, or whether you're a manufacturer, or whether you're an advisor. Thank you very much for your time. Appreciate it.